Welcome to another edition of the Inspired Stories podcast, where leaders share their experiences so we can learn from their successes and be inspired by how they've overcome adversity. My name is Anthony Codispoti, and today's guest is Chad Capooth, Vice President of Operations at Denim. They are an all-in-one financial platform specializing in flexible factoring solutions that help modern freight brokers, trucking companies, and 3PLs manage working capital, carrier payments, and back office processes. With significant milestones, including processing over $2 billion in payments since its founding in 2019, Denim has quickly become a trusted name in the fintech industry. As Vice President of Operations, Chad focuses on driving innovation, launching new financial products, and collaborating with leadership on strategic initiatives. His background spans marketing, business development, and operations management, making him an expert in growing businesses and creating efficient systems. Under his guidance, Denim has continued to scale its services while keeping customer satisfaction at the core. Today, we'll explore his journey, discuss key lessons learned, and uncover how he's helped Denim embrace challenges and opportunities along the way. Now, before we get into all that good stuff, today's episode is brought to you by my company, Add Back Benefits Agency, where we offer very specific and unique employee benefits that are both great for your team and fiscally optimized for your bottom line. One recent client was able to add over $900 per employee per year in extra cash flow by implementing one of our innovative programs. Results vary for each company, and some organizations may not be eligible. To find out if your company qualifies, contact us today at addbackbenefits.com. All right, back to our guest today, the VP of Operations of Denim, Chad Capooth. I appreciate you making the time to share your story today.
Yeah, hey Anthony, I appreciate you having me on. Excited to share it and tell everybody a little bit about factoring for those who don't know what it
And
is.
actually, let's start there. That's a great
Yeah,
place to start, is what exactly is factoring?
yeah. This is a question I get asked a lot. It's an elevator speech I've practiced quite a few times. As there's kind of multiple ways to explain it. The easiest way to explain factoring is we are purchasing another company's accounts receivable at a discount. So we are giving them 95, 98, 99% of their AR value. We wait for their debtor to pay so they don't have to wait. So we give them that cash flow day one versus waiting net 30, net 60, net 90, so on and so on. So that's the simplest. It's buying AR at a discount.
And so then you take on the risk of potentially not being able to collect on that receivable. Is that right?
Correct. We take on the risk and the waiting. We also do things like the billing. We do the payment application when the payment comes in, and so we do the collection calls if needed. So we take on several different services. But at the end of the day, you're exactly right. We provide the capital. We take on the risk for your debtor to your customer to pay.
And this isn't exactly my area of expertise, but if you're talking about taking, 1, 2, sort of 5% as a fee, it sounds like it's much cheaper than, I don't know, kind of taking on traditional forms of debt or maybe even selling off some equity in order to be able to sort of bridge that gap or to fund growth.
Yeah, I think this is a great product. If you're not looking to take on debt to kind of raise capital for your company, this is a way to do it. Many other countries have this as a mainstream product. It's not been a product that's been widely known in popularity in the US, but that's growing and changing quickly as more technology and creators are coming into space to kind of renovate it and bring it up to speed with the rest of the industries. But it's a fantastic product. It provides that working capital day one, and usually we can do it within an hour of you submitting an invoice to us. We can get you that capital. So it's a great tool. I think you mentioned the cost. I think if you look back 10, 15 years ago, the cost wasn't really competitive with banks. But because so much technology has come in, because so many other people have entered the space, the competition has gotten stiff. And so now rates are very low. And so if you can go grab those 1 or 2% rates, yeah, you're talking about 12% money. Um, but it's always working capital, right? There's not like a drawdown. You don't have a certain amount you can draw from the bank. Like if the bank gives you $100,000 limit, that's what you can draw down, then you have to pay it back. Working capital factoring, every time you get an invoice, you can sell it to that factoring company. So it's kind of this, it kind of grows with you type of product, and then it comes at a really good price.
And so when a client signs up with you, are they just selling you some of their receivables, or is this they're signing up to do it all with you?
Yeah, for Denim, we allow you to pick and choose the receivables or the customers you want to factor. Other factoring companies may ask you to factor everything. You may negotiate a rate that's based on the volume you're going to submit. So that might kind of say you need how much you need to submit. But at Denim, we kind of believe submit the debtors or the client, what I call customers, what we call debtors, to that you want to factor. And then if you have ones that pay in really quick terms, you don't have to submit those to us. And likewise, if you want to submit debtors to us but don't take the financing, we'll still do the collections and the payment application for you. So we offer kind of a lot of flexibility, and we think that's kind of one of the separators for Denim as compared to the rest of the factoring industry.
So you mentioned that factoring has not been as popular here in the U.S. as some other parts of the world up until now. Why do you think that's been, Chad?
Yeah, I think, if you look at the kind of the US and how we've done business and how we've raised capital with companies, I mean, that debt has been a very powerful tool for US companies. So that kind of overshadowed everything. And banks have a hard time getting comfortable with factoring. It's a lot more manual process. When you talk about pushing an invoice, we are buying that invoice from you. And so from the client's perspective, they just send it to us. From a factoring's perspective, we've got to make sure the paperwork's there. We've got to make sure that we are okay with taking on the risk with the customer you submit. Then we've got to build out, collect it, and apply the payment. So there's a lot of overhead work that goes into it.
Mm.
So that kind of kept a lot of banks out of the industry. I think the second piece is, again, looking way back in the early late 90s, early 2000s, there was a lot of factoring companies out there that were not always above board on how they did things. And so they would charge exorbitant fees. They would hold clients to terms that were just not reasonable. And so this created a lot of bad stigma for factoring. But as it's grown in popularity, a lot of people in the market that want to do it the right way now. And so that's what's happened is it's terms are acceptable, fees are acceptable. And so it's really kind of starting to blossom.
And I understand your first job out of college, National Bankers Trust, was kind of your introduction to the whole factoring space. How did that come about?
Yeah, that's a funny story. So I graduated from University of Tennessee in Knoxville, 2009. That's kind of right when the economy took a turn for the worse. The housing market wasn't doing great, and so jobs weren't out there. There weren't a ton of them. And but I ended up going on a DC fishing trip with a friend, and on one of the guests that joined on that deep sea fishing trip ran a factoring company. His name was Mark Bergen, and he was one of the partners at National Bankers Trust. And I was like, well, I'm looking for a job. He's like, well, do you know what factoring is? Not a clue. And he said, well, we need collectors. And I said, great, I'll take it. It's in Memphis, home city. Perfect. Let's do it. So I kind of started there in collections. Probably took me at least 6 months to really get an understanding on how factoring worked, all the moving parts of it. And the more I kind of started to grow at that company and the more I started to learn, I fell in love with it. It's an absolutely fascinating product, and there's untold potential that you can kind of branch out into with factoring. So that's what kind of got me started, and I've pretty much been in factoring some form or fashion since then. And I still think like even though the bar's been raised and we're seeing a ton of growth in factoring, there's still tons of potential there. And I think you're starting to see why so many people, especially technology companies like Denim coming in to disrupt the space because the potential is there. And the catalyst for that is technology.
So you worked at a company called Transvac Capital for a little while, and I understand you and your boss there actually went off and started your own company in the factoring space. Tell me about that.
Yeah, I went up to Salt Lake City after National Bankers Trust. They were also a factoring company, primarily specialized in factoring freight transportation, trucking companies. And I met a gentleman named Whit Lee there. He was the owner and president of the company, and just really got along with Whit really well. Helped him run the operations department, gain some efficiency increases. In fact, we got to a point where it was good enough for him to be able to sell the company and something he'd been looking to do. So I was able to help him facilitate that sell. And at that point, it was being sold to a company, I think, out of one of the Carolinas. And so I wasn't quite sure what I wanted to do. As any kind of time you go through that acquisition, there's a lot of questions. And he kind of talked to me and said, I have a crazy idea. I can't go into straight factoring, but I've got a concept of taking what is the concept of factoring and apply it to e-commerce sellers, people that sell on Amazon, Etsy, Walmart, all these online marketplaces. And we talked about it, and it sounded like a crazy idea. But the more we talked about it, we figured out some ways that we could, through technology, make it happen. And so we entered that space, and it was a really, really cool experience. And we saw a lot of growth there especially when COVID hit, and it was really awesome. So I really appreciated him giving that opportunity and learned a lot from it. But yeah, it was still kind of crazy looking back. Like we took what's basically this financing product and gave it to e-commerce sellers, something that no one has really been doing up until that point because it's such a high risk. Because if you think about these e-commerce sellers, they don't have real estate, they don't have commercial buildings, they're basically selling product out of their garage, or maybe they have a storage space. And so it was definitely a learning curve and definitely a great experience.
Was that something that you felt like had long-term legs to it, or were you sort of finding cracks in the foundation because of some of the lack of collateral issues you mentioned?
Yeah, I think there's a lot of legs to it. I know there's still a few companies out there that are there. I think one of the difficulties that we ran into is because there's potential there, companies like Amazon and Shopify moved into that space. I'm not 100% sure Amazon still have it. Fairly positive Shopify still has it, but they have their own lending arms to their own sellers now because it was such a lucrative, profitable area, and it benefits them, right? If they keep their sellers in business and their sellers can take more inventory, that's more stuff for me and you to go buy on Amazon. So it's definitely still got a ton of potential. Just as a you mentioned my first job, MBT, I kind of worked up through the risk ladder there, kind of running the portfolios. So as a risk person, it was always a little bit difficult for me to get comfortable with the risk overall because of those things you mentioned. But I still think there's a ton of potential there. And again, like many industries, technology is kind of the unlock.
Yeah. So how did the opportunity to join Denim come about?
I was still kind of running the e-commerce seller financing at the time. Um, but I was really kind of wanting to get back into factoring, more traditional factoring. It's where my knowledge was, it's where my expertise was. And so I kind of started just searching LinkedIn, and there was this company called Denim, and they had a post up there. And the more I read about it, they positioned themselves as a tech platform that's in factoring. And so I felt like this was always a big missing piece for factoring. I mean, I think about some of the competitors that went up against the years. We've all kind of did the same way. I mean, we had fax machines, emails, print off documents, scan them back in, but no one was really making this headway with technology. And I think there was tons of room for it. And some were, right, with OCR technology, scanning documents, but it wasn't there. But when I looked at Denim, they were doing it, and they were doing it with pure technology play. And I thought, here's a company that wants to disrupt the industry. Here's a company that's going to disrupt the industry. And so that was so enticing. So I applied, and happened to be a good match, and went through the interview process. And the more I talked to the leaders, B and Sean Vo, the more I realized just how truly vested they were with technology. And so that was kind of the nail in the coffin for me. I was like, I've got to go here.
So, Chad, you have mentioned the word technology multiple times here in our conversation. Why is technology such an important piece of all of this?
Yeah, I mean, first of all, I love technology, so I will always bring it up. I try to be on the kind of the front runner, the edge of new technology. But for factoring, especially, I talked about it earlier. I mean, when my first stop, we got paperwork via fax and email, so literally fax machines printing off paperwork. We would then take that paperwork. Someone had to manually review it, manually scan it in. Then we'd have to manually make approval rate, manually send the money out, and so I think at one company I counted 12 manual touches to fund an invoice. And so your overhead was always going to be tied to your growth. So if you brought in 10 more clients, you have to hire a new client service rep. You have to hire a new processor. So it wasn't scalable, right? And so it was hard to make that money cheaper because it was so much overhead involved. And so the more we could introduce and the more we could inject technology, the more we could kind of curb that OpEx upward trend and start to kind of really lower OpEx, lower that spend, and get it to a point where we could bring on $15 million more of AR, but only maybe have to hire one person to take it. And I will say that has become so much more evident so with the injection of AI, right? I think there's a ton you can do there, but Denim's done it incredibly well. We most companies our size would be double our employees. And because we've been able to leverage all the tools that have been built for us, we can handle a lot more per employee than traditional factoring.
Why focus specifically on the freight industry, transportation?
Yeah, I mean, I think the freight industry was kind of always been a big target for factoring. I think the way that the bills and the payments of those bills um, kind of progress makes it perfect. So in factoring, you typically have a set of standard paperwork. You have the carrier invoice, what we call the bill of lading, and then the rate confirmation. So it's like three documents that are, while every company has their own different version of these documents, are all kind of standard. And then it's extremely common for those customers, for our clients, to pay anywhere from 30 to 90 days, sometimes 120 days. And trucking companies, especially, they have a lot of upfront expenses, fuel, tires, insurance. And so they can't wait these 30, 60, 90 days. And so you get that classic crunch, that capital crunch where you've done the business, you've done your service, but now you're waiting on your debtor to pay. And until that debtor pays, you're kind of out of that capital. So it's really just all the ingredients are there to make the most sense. And so I think that's why transportation's really been popular within factoring. But don't get me wrong, there's plenty of other industries, manufacturing, healthcare, construction. There's a bunch of industries that have factoring companies that specialize in them. But I think transportation's always been kind of seen as the great stepping stone, the kind of entry into it.
So I'm trying to wrap my head around some of the technology, excuse me, that you guys have. So are you doing like a direct integration, right with their billing software? Are you still kind of getting some like PDFs or like some manually like printed out, bills sent over that you guys then have to either use some manual or some tech process to get into your system?
Yeah, we are definitely integrated. A lot of what the freight brokers use in that space are what we call TMSs, transportation management systems or software. And there's some big ones out there like McLeod and Ajax. There's a bunch of them out there that do these TMSs, which kind of help arrange the freight, keep everything organized. And so we're integrated with a lot of these TMS systems. So that allows for this back end seamless transition for our client and us. So all the paperwork, all the documentation comes through with a click of a button from our client. So we don't see as many manual jobs submitted through Denim, but we also built a portal out that makes it nice and easy for them to upload their documents. Our system goes in and leverages AI to read through the documents to identify what every line is in that document, or if there's potential issues, right? Like if there's page 2, 3, and 6, but no page 5, our AI says, "Oh, we're missing a page," and can let the client know, "Hey, you just forgot this page really quickly." So that allows us with a lot of kind of seamless integrations. We have connections into accounting softwares. We have our own integrated ledger report, which helps clients quickly import into their accounting software the transactions have been done. We've leveraged technology to allow what we call our real-time payments, which is our express factoring, which we can literally get funds into your account within minutes of approval. So it's faster than a wire. And so these are just some of the technologies that we're using back end to kind of make this. Our goal is to be seamless, right? Like we don't want our clients having to spend hours with us a day to get the jobs funded. We want them to spend seconds. And so that's really what we've been able to accomplish. So it's been awesome to see. I think there's plenty of room that we can still improve on, and we've got some innovations on our product roadmap that I think are going to make even a better experience for our clients. And excited to roll them out. And one thing that's been really cool working at Denim is when we say we can knock something out in a month, they knock it out in a month. And from my experience at previous stops, it's usually delayed a couple of months, right? It's delayed, it takes time. But man, this engineering product team, they can knock things out lightning fast. And every time I'm doubting, I'm proven wrong. So it's been humbling too.
That's awesome. Yeah, sort of the classic technology timeline is take whatever they tell you and multiply it by two or three. But it
Yeah,
sounds like you
yeah.
guys have you've got a great team in place that's been able to overcome that trend. So Denim's been around for just a few years, but you've already processed over 2 billion. That's billion with a B
To be.
in payments. Aside from the technology, which is obviously hugely important in that, what else has made that kind of growth possible?
Yeah, I mean, outside technology, it's people. And I think those are pretty close head to head, right? I mean, you could build all the technology you want, but if you don't have the people behind it to help facilitate it or run it, you're going to really struggle. So we built a culture at Denim that we really, really build this kind of teamwork culture, innovation culture, but we want our employees to be builders, right? And so we have built our software on a foundation that allows the employee all the way from a client service rep all the way to a salesperson to marketing to be able to build within our software and innovate. And so what's been really cool is to see the ideas come to life for some of these employees who have literally started from scratch and brought it into production to help facilitate our clients, facilitate our operations run more efficiently. So it's a people thing, it's a culture thing. Like you've got to have both. I know, like in the news, we see a lot of companies they lay it off to entire departments and relying all on AI, and some have backtracked, some are still going forward with it. And I'm not saying that's a bad decision, but from my seat, you're always going to have people in place, and so giving them the tools to kind of grow in with this technology, learn how to leverage it, learn how to build with it, has been absolutely crucial for Denim. But we have extremely talented people in almost every department. Our leadership has been extremely talented, and so these are things that have definitely progressed and helped. You could have built the best technology in the world, but I think without our people, without making the right hires, it wouldn't have mattered. And so it's right up there. I mean, people and culture are huge.
Do you get involved in the hiring process?
Yeah, of course. I think especially when it comes into my department, I'm pretty heavily involved. We go through about 4 to 5 interview step process where we're trying to not only gauge technical skill, but how they're going to fit. I think what a lot of people on, I'm sure you've heard previous people to come on the shows, like someone could be very technical sound, they can be very knowledgeable, but if they're not a culture fit, it can be very detrimental. So like we try to especially being a remote first company, like we have to very, very heavily index on a culture fit. And so anytime I can help step in and weigh in on any one of those layers that we're trying to discover, I'll jump in there and do that. But yeah, we typically involve about 3 to 5 people per interview process to make sure we are hitting, the right hires. And then one of our 2 co-founders, we usually involved on the last step to even ensure further that like it's a good culture fit. Because while we tout ourselves technology and it's important, culture is really, really big here.
How would you describe the culture there?
Uh, Innovative builders and teamwork. I kind of know I said that in the previous question, but that's what we're going for. I think what's really awesome to see is like when somebody has a big win and they share it, the whole company chimes in, right? Everybody's supportive behind it. When we have a problem or something's not working the way, everybody jumps in to assist. I think one of the biggest areas to have friction, 2 big areas we can have friction within factoring is between sales and risk and operations, client services and risk. And those are 2 kind of departments that, have a little bit different objectives, right? But the cool thing about Denim is like all the departments work together to make sure like we're bringing on the right clients, but we're also not like choking out the pipelines where we can't bring on clients. So that kind of like inner teamwork has been crucial. But we have builders, we have people that want to innovate, we have people that want to make a difference, make an impact, and disrupt. We've got a lot of employees here that have been in other factoring companies. They've seen the way it's done. They believe that there's a better way to do it, and they're trying to do that, and they're going out and they're accomplishing that, and we give them the tools to keep building on that. So that building mentality is something we really index heavily on. We want our teams not only be tech forward, but if you think it's a good idea, build it. Get it as far as you can. And if it takes something that's a little bit above what you're capable of, it takes programming that's above, we'll partner you with an engineer. We'll partner you with a product person, and we'll get it built. And we see this every quarter, something getting rolled out that was built by not an engineer, but built by a client service rep, a salesperson, a risk person. So I think those are what make our culture special.
How are you able to assess that culture fit in the interview process?
Yeah, I mean, we do obviously face-to-face interviews or Google Meet videos. We do what's called test drives, where we kind of give different scenarios where we're looking for key metrics. But I think most of all, it's just experience. You go through enough hiring, you start to know for those key traits, those key information on the resume that just kind of stands out that says they're a builder. And we don't matter, 100%, right? Like not every company is a fit for an employee. Like I think it's a two-way street. Not only do you have to be a good fit for the employee, but the employee has to feel like you're a good fit. And so that two-way street, sometimes it can be difficult to make sure, but I would say we bat 95% of the time we are hiring really, really expert people, but it's through experience of like knowing what to key on in an interview process, but that test drive. And then it's all 5 of us, 4 of us, 6 of us who are involved in the interview process coming together and saying, this is what I found out. This is what feels really good. something I'm a little concerned in, and we talk it out. And so we try to make a group decision on the hire, which I think is also big. I think if you start hiring in silos, I think your accuracy on the hire starts to go down because you don't get those outside perspectives. And so maybe I'm hiring for what I call a portfolio risk manager, but maybe I want to know what my VP of sales says, or maybe I want to know what my VP of product says, because they're going to have a perspective I don't have. And so I think that's really important.
And they're going to get to work with that person on a regular basis. And so they've got some input on what that dynamic should feel like.
Correct. Yeah.
So, Chad, give us a little bit of insight into what you do as the VP of operations.
Yeah, it's a great question. I try to wear multiple hats. Not try, I do wear multiple hats. So everything from managing our client services to managing our risk, to helping establish our strategic build outs and designs, especially when it comes to our client experience and our employee experience. I'm pretty heavily involved with sales, not the closing of the sales, but like how can we bring the client on safely? How can we fit them into our portfolio? Does it make sense? These are all kind of the 10,000-foot views that I'm helping influence. I'm also trying to give space to our employees to grow as well. And so while I could probably pick up a lot of slack and say, let's do X, Y, and Z, I want to be able to kind of delegate and say, hey, this is your time to do a cross-departmental project. Let's see how you get it done. I'm here to assist. But really from operations, it's client service, it's risk, are the two big ones when you look at factoring that get involved. The third one is probably collections. So I always say, and especially in factoring, and I'm sure many industries that kind of lend money, it's really, real easy to send the money out. It's really hard to get the money back, right? And so that collection and how we do it, because there's different ways we can go with collections, right? We could be very, very, very hard on collections. We could harass the debtor, call them every other day to get paid. The interesting thing about factoring is we are stepping into a contractual relationship between two parties. So we are this third party that's coming in. And so we have our clients that are running for some debtors that provide them a lot of revenue, a lot of business. And so if we go too hard on collections and we ruin our relationship, then I haven't accomplished anything because now I've lost that business for them. If we go too soft and these days to pay are trending out and it's taking longer to collect money back or there's more defaults, then I haven't accomplished anything. So there's always this finesse of like, how do you come in as a third party into this two-way contractual relationship and do it seamlessly without upsetting the client or upsetting the debtor? So there's always this kind of
there's a delicate balance that you've got to strike there, right? Because
yeah.
and this might be unfounded, but when I think of collections, I think of people being very aggressive, calling, texting. I don't know if they've got your email, sending mail to your house, and you're nodding your head like, that happens a lot, right?
Yeah. I mean, 100%. I mean, some factory companies over-index on it, right? And so they don't care if they ruin that client's relationship. One thing at Denim we pride ourselves on is like we want our clients to grow because the client grows, we grow. So that means maintaining their current business relationships, but also making sure that their debtors are paying on time. And so there is this balance. And I'll plug technology again. One thing we're working on is our AR automation workflow. We're kind of using these back-end rules and AI agents to help us with our collections. So now we can white label our collections. We can make it look like it's coming from our client. We can change the tone, the verbiage, the messaging, the cadence. Where this has typically been very heavily dependent on people, we are trying now to interject more AI to make it feel more natural in the emails, to give a better client-debtor experience. So we can actually kind of customize it at that level versus a widespread policy. But it is, look, I've ran a lot of different collection departments. Every single factoring company that I've stopped at, I've run collections, and we've lost our clients' customers because the collector went too hard, right? They call too much, they email too much. I've been on the opposite end where we didn't catch something because we didn't make the call, right? And you said it, there is this balance, and finding that balance it's tricky. But it's absolutely crucial to do it right. And so usually once you do it right, once the client's comfortable, you've got a client that's going to stick with you for a really, really long time because it works really, really well. But the more friction you create on the other side, you're probably not going to keep that client around for long. They're probably going to churn out, and then you lost that client. So, how do you make that a better experience for them? So going back to your original question, those are kind of the ways that I kind of interject myself, from the VP of operations role. There's there's balances in every single area you look at. We talked about collections. You're exactly right. There's also a balance to the risk side, right? I am, we are, as a factoring company, we are extending credit for our clients to their customers. Most of these customers aren't publicly traded. They are private companies. And our customers are getting $500,000 to $1 million contracts a month. So that's $500,000 to $1 million of AR that we're going to purchase every 30 days. And I've got to make sure we're comfortable enough purchasing that. And I've got to rely on what little information there is out there. So if I go too hard on credit and say we can't do that much money, the client's not going to come on board, or they're going to go to another factoring company that will. If I go too light and something goes bad, then I've lost a bunch of money. So there's all of these different walks. Client service is no different, right? It's a difference of being proactive, client friendly versus maybe the client's ghosted you for 3 weeks and gave you bad paperwork that's fraudulent. And so how are you going to approach that? And so there's all these different scenarios. They all take finesse, which I think presents a really unique challenge for factoring companies.
Chad, give me an example of a calling script that would be too aggressive versus one that you feel like is more representative of the approach that your team would take.
Yeah, I think with collections, that's probably the easiest one. I think the call script that's outside of frequency, the call script that is too aggressive. It's calling this debtor, hey, Mr. Walmart, you're 23 days late with your payment. What's going on? If you don't give us a payment, by end of day, then we're going to up our collection efforts and possibly pursue legal action against you. You bring out the legal queue, it's done. I mean, that relationship is done 9 out of 10 times. So that's too aggressive, right? Where an alternative approach is, hey, you said you're going to pay us day 30, it's day 45. Do you have all the paperwork you need? Is there anything else we can present to you to get this paid? Would it be possible to get a payment status by end of week? And so I think that approach is a softer approach. I think each approach has to be tailored to that client customer relationship, client debtor relationship, because there are debtors out there that will purposely not pay their bills to kind of float their cash balance. And so you've got to kind of start to recognize who you go a little bit hard on, who you go a little bit soft on. But the easiest indicators, how frequent is your client running for that debtor? If this is a one-off load, you can go a little bit stiffer in your approach. If this is a recurring customer for your client, then you really need to find the cadence. And I think it's about building that relationship too between our collector and that person in the AP department. And if our collector can build that relationship with John or Jane Doe in that AP department, you catch more flies with honey, right? You're going to get better answers and you're going to get more insightful information. So it's just kind of tailoring that message, that communication, that frequency of communication on a per relationship basis.
I want to kind of go about this from a slightly different angle. Like specific case studies can be really helpful for people to kind of wrap their heads around in terms of the value of the service that you're providing. Can you think of a specific case study, a specific, customer instance where you guys were able to go above and beyond for a client that was facing a critical cash flow issue and really help them in a big way?
Yeah. Gosh, this has happened quite a bit to me throughout my career. I mean, like I said, the goal is we want our clients happy, when our clients continue business, because if they're growing, we are growing with them. Literally, we grow with them, right? And so, I think one instance that's came up very fresh and very, very recently is we have a client that was running with a decently reputable debtor, and they had a good amount of their business concentrated with this debtor. And unfortunately, this debtor filed Chapter 11 bankruptcy. Chapter 7 originally and got moved to Chapter 11. So they filed bankruptcy. So the obligations, the debt, the amount owed isn't getting paid to our client. We have two choices as a factoring company we can basically make at this point. We could say, all right, well, we're done. We're going to do everything we can to collect out from your debtor, but we're not funding you anymore. You owe us several $100,000. It's over. Or we can work out a payment plan that works for both us and the clients. And typically it's a little bit more favorable to the client, right? I mean, we're on the hook for a bunch of money, so we'd like to figure out a way to get this paid back. But we want the client to keep going. And so what we're able to do, what we were able to do in the scenario is work out a payment plan with this client that works. Right? We said, okay, what if we did this a month? And we'll revisit this in 90 days. In the meantime, we'll still keep pursuing this Chapter 11 bankruptcy with the claim in the bankruptcy courts. But in the meantime, you let us know, you work with us. So we check in with them about once a week. How are things going? How's your cash flow going? And we're working really hard to keep them afloat while we kept this going. And this is a blueprint that I've been able to accomplish, and factoring companies have been able to accomplish time and time again. It's just these workout scenarios. It's it's really easy to react and overreact. But when you do that, typically it's not a good outcome. And so in this instance, we're keeping our client going. They're still able to pay their employees. They're still booking freight. We're still making headway on getting this paid back. And if it continues this way, we'll be paid back in 8 months. And more than likely, I would like to hope that this client's probably going to be a client for life with us because we stuck through it with him when things got tough. Where we could have just put him out of business, and then he's out of business. The 20 people he employees are out of a paycheck. And what have we really accomplished? Maybe we get our money back, maybe we don't. So I think that's something that comes up all the time. I think other scenarios are, again, going back to kind of that collections. It's like, hey, client comes on board. I've got these 5 debtors. They are very sensitive. They don't want people calling them. So we find out solutions like frequencies, or maybe they email the debtor for us and CC us on it. So like we found out like all these solutions to kind of like fit our product with a client versus trying to fit our client into our product.
I like that. How would you characterize your clients? Like, who are they? What size companies? They're trucking companies? Are they also warehouse companies? Like, help us wrap our heads around who you serve.
Yeah, our two niches are freight transportation and freight brokerages. So freight transportation, the truckers that are running the loads across America that the 18-wheelers you see all throughout your city and on the highway and interstates. And then freight brokers. Freight brokers are the ones who are arranging the freight between shippers and carriers. Not every shipper wants a department dedicated to arranging that freight. So that's where freight brokers come in involved. We range everything from startups, day one startups, to people who are flipping $100 million a year in revenue. For freight brokers, for trucking companies, it's people that have one single truck. They're on the ones out there on the road driving it, to people who are running fleets, 50 plus trucks. So we can kind of take on a vast array of size. But we have, what we consider our ideal client profile. That's typically people that are doing anywhere from 50 to about, you know, 50 million of AR a year, or yeah, a year, sorry, is kind of our ideal client profile, but we're able to kind of stretch thin above and below that to bring on these clients.
Chad, what's your superpower?
Uh, I think
Don't
I've
be
always,
modest.
I think I think I've always been able to connect with people really, really well and kind of have a high degree of empathy and kind of, emotional intelligence with them. I think I try to take the time to understand where they're coming from, where their pain points are, and understand maybe how Denim has done something, or another factoring company that I worked at has done something that kind of creates this pain points for them. And it's like, how do we get past that? Look, when you create problems for a client, they usually kind of let you know via email or video chat. They're usually a little bit upset, and so it's like, how do you calm down that conversation and say, okay, well, here's the problems. Here's how I can fix these problems for you. And that's something I've always been good at. It's kind of let me be involved in not only the sales side but the operation side both, and that's kind of where I bridge the gap. So I've been, a lot of times called onto a sales call with a salesperson to hear this unique position a client's in, or this unique scenario they have. Like, how do we make it work, and how do we make them feel good that we can make it work? And on the flip side, like workout scenarios with clients, I've always been very good at de-escalating the situation and then listening, empathizing, and figure out how to like move forward with it. And I think like I think that's a skill that I kind of undervalued myself, but as I've gotten older and progressed through my career, it's not everybody natural tendency to be able to do that. And I'm not afraid of having those hard conversations or calling that client that's really, really upset and no one wants to talk to because they've had a bad email exchange with them. But for me, it's like, well, look, we've caused a pain point, or this client's experienced a pain point. This is why they're lashing out. This is why they're upset. Let's identify it. Let's figure out a way to fix it for them. And I think it's really important. It doesn't matter if you're 20,000 in AR, if you're 2 million in AR for us. It's like, we want to figure out the pain point and solve it, because if you're having it, odds are we have someone else in our portfolio, if not more, that are also experiencing it. So that ability to kind of like establish that connection with clients on the emotional, but also the understanding and empathy level, I think has always been something I've been really, really good at. And the more I get older, I kind of recognize it, that like that's a skill that like has really kind of helped me through my career.
Chad, in my experience, a lot of times growth comes from the most serious challenges that we face in our life. I'd be curious to hear about a serious challenge that you've overcome. What was it? How'd you get through it? And what did you learn?
Yeah, I think there's a lot of different ways I could go with this question. As it relates to factoring and like challenges from like a career business standpoint, I think the biggest one for me um, was learning that risk, credit, and factoring are really tough. And I just talked about building these kind of emotional relationship, these connections, this empathy with clients. And I think that's really important. I think the other thing is on the flip side of that is like I've also got to realize like this is a business and sometimes people will say and do what they need to do to get by. And so, way early on, one of my first stops, National Bankers Trust, I worked closely with the client for about 4 years. Trusted them. If they said they were going to do something, they did it. Um, and about towards year four, the end of that year four, came to find out that they spent the last 6 months submitting fraudulent paperwork, fraudulent invoices. They got in a really, really bad spot. They couldn't pay their people, and I took their word for it. Prior, that the invoices were good, they're going to pay, the debtor's going to pay, don't worry about it. And so built up $400,000 of AR that was not good. And so I took that one hard. Like I'm not sitting there and trying to tell you this is like some sob story, but that one took me hard. Like my trust was broken, right? Like I want to believe people when they tell me something, but that kind of broke my trust. And it took me quite a while to like realize like, yeah, they committed fraud, but it took me a while to understand why they did it. They were in a really bad place. And so their fear was they couldn't pay their employees. And like I started thinking about like, how bad would that be if you had to reach out to 50 people and say, I can't cut your paycheck today. And so like it kind of led me to an understanding. Like I'm not advocating you should ever commit fraud, but it led me to an understanding of why they did it. But it took me a while to like do a risk roll where I wasn't over indexing on risk and being too conservative. Like it took me a while to kind of bounce back from that. And just realize like I take the motto and whether it's a healthy motto or not, it's I'm taking this motto, it's not a matter of if but when. And I kind of apply that to a lot of things, but especially risk. And it's not a matter if a client goes bad or when a client goes bad. It's not a matter of if a debtor goes bad, but when a debtor goes bad. And so I've kind of adapted this model. I try to present the best client centric foot forward, but in the back of my mind, I always have to kind of weigh like on the flip side, what if things aren't as rosy as they appear? What if there is something going on? And so it's this kind of trust but verify methodology that's brought to me. But I think anytime I take a loss, it stings. And it just could be from the fault of the client or no fault of the client, right? Like if a debtor files bankruptcy, man, it sucks, but it stings. I should have seen it coming. I should have seen the slow payment, slow terms of payment. I should have seen the news out there that are kind of suggesting it. So anytime I take a loss, it really stings. But that first one really, really stung. I mean, I had built up a high level of trust with this individual and never thought that it would end the way it
How did
did.
that situation actually play out from a business perspective? You guys just ate the loss?
Yeah, well, no, we kept them around until we were able to be made whole. We immediately reached out, confronted the client. They kind of broke down, told us the story, why, what happened. Um, at that point, though, the trust was gone. But if we shut them off right then and there, we were out the money. And the clients swore up and down that they give us paid back, just give them time. And so we kind of went to this what I call this. Full audit proof approach to the client. So everything they submitted to us was manually reviewed, checked. And so it took about 6 months, maybe 9 months. But we were able to kind of collect back through payment terms. It wasn't easy. It wasn't easy for the client. It wasn't easy for us. Once we did get paid back, though, we helped move into a different factoring home as that kind of trust had just been violated at that point. And so we did think it was fair to him, and it probably wasn't good for us to continue on. But amazingly, we were able to work out. But when it happens in that moment, all I see is that's $300,000, out the door, gone. And at that time, I was either a credit manager. I think I was a credit manager, and so like that was my number one objective is don't lose money. And here's the $300,000 loss. And I don't care what business you're in. I don't care what size you are. I mean that's a lot of money, and that stings. So
Well, not only does
we
the money sting, but like you said, you had like this strong personal relationship with them as well. And
yeah
so like that personal trust feels violated. And
yeah
so it's like this nasty like 1-2 punch that you're trying to work through.
it is, and it sticks with you. Like I talk to clients probably every day, and like gone through workout scenarios countless times after that. But it's always now in the back of my head. It's like, are they being 100% transparent and honest? Is there something else going behind? Have you caught it? And I think it's kind of made me better at my job. But at the same time, I don't also love having that attitude because I do want to believe in people. I do want to believe in the good in people that are within us. But now I've also got a healthy appreciation that if it's between you, the factoring company, and the ability for the client to keep their business going and paying their employees, there's a good chance they're going to do what they need to do.
Yeah. Well, if nothing else, like kind of the silver lining and all that is now you've got your antenna up. Like you're a little bit more aware of these kinds of
Yeah.
situations, and you're on the lookout for them.
Yeah,
And I'm kind of
definitely.
curious, Chad, are there, if you had to recommend to our listeners a particular resource, maybe it's a book, a podcast, a course, something that's been really helpful to you?
Yeah, there's one book that's kind of stuck out with me. I mean, one thing I've been at a few startup companies and companies that have gone just a little bit beyond startup, but it's the messy middle is the name of the book. I think it's by Scott Belsky, but it kind of really talks about the challenges from going from startup to succeeding and like what that messy middle is. It's where most companies live, right? I mean, it's when you reach a huge Fortune 500 company, there's a lot of processes and put in place that have been refine, and work really well. A lot of people call it red tape, but it's there's a reason why it's there. It functions very well. But when you're the startup stage, I always like to compare ourselves. It's a giant cruise boat compared to a small speedboat. And as a startup, you're a small speedboat. You're pivoting and changing on a dime. It's really easy to turn that ship. It's really easy to make changes, but that creates this messy middle. It makes it harder to manage through the process changes through the change process with your employees through developing policies that fit it. And so you write a policy 3 months ago. Now your product rolls out something new, and now you've got to write a whole new policy that contradicts that policy. Now you've got to reteach your team. So there's always this messy middle. And so I highly recommend it because it can feel overwhelming. It can feel like you're drowning. It can feel like you're not accomplishing anything or you're just running in place, but really speaks to like we're all there. We're all trying to navigate through it. And it's like even though sometimes it doesn't feel like you're making change, you are making change. And that boat does start getting bigger and bigger. And so take hold of this moment because as your company grows, you're not always gonna be able to change on a dime. So like those changes you want to make, and when we do make a change and it's positive, it feels really good. But it gets harder as that boat gets bigger. It takes a lot more to turn that cruise ship. And so like take a hold of this. Don't get overwhelmed. Learn how to grasp it, learn how to manage through it, and learn how to lead your team through it.
I wonder if there is maybe like a more specific, concrete example of you going through that we could talk through. Because I think so many business owners that I've talked to, so many employees in their careers that I've talked to, they go through what you're describing, this sort of messy middle where it's like, am I doing the right things? Am I making progress? I don't know. Like, I just feel like I'm sort of stuck in quicksand here.
Yeah, I mean, I'll give you a quick example of kind of like the back and forth of that messy middle and like making changes on a dime. And we let's not dive into the politics behind it, but tariffs have been a hot topic now since the beginning of the year, and we are in an industry that lends money based on our clients' customers' ability to pay. And so, how will these tariffs impact it? And so, as the pause and unpause of these tariffs have changed, I've gone back to my portfolio risk manager to be like, we need to be more aggressive. We need to be less aggressive. We need to be more aggressive. And that's really difficult as a risk person to change the direction or how aggressive you're being on these decision making. And so that's really tough to like handle that change management in there. But I think beyond that, I think like as you roll out a new process, it becomes really tough. As you roll out things that are innovative and technology driven, they tend to disrupt everything you've built prior to that. And so, this AR automated collections is a really good example of it. I think if you've asked anybody that's been in factoring, collections has always been a manual phone call thing. But now here we are making a change going from having a person make these individual calls and emails to now training people how to manage these leverages that the AI or the system will use to make these calls on behalf of you. And it's a different concept. It's completely different mindset. So I am asking this portfolio risk manager to say, hey, everything we've trained on for the past 2 years, everything you've trained on prior to that, forget it. Here's how we're going to do it going forward. And so, like, when you're in that moment of that transition, things feel frustrating, things feel tough. It feels like, how's this ever going to work? How can you see the light at the end of the tunnel? And as a leader, sometimes maybe I have those doubts, but I can't express those to my team members because I want them to embrace this change. And so like that's where it gets really messy in the middle. It's like how do I display this level of conviction that this is going to work to my employees so they embrace it, but also handle this kind of doubt in my mind. And I think that's tough. And I think the best way we navigate it is just embrace it the best we can. Understand that there's going to be kinks, there's going to be things don't operate, great. But if you have a good product and engineering team behind you, which we do, it does make it a lot easier because we can make those changes and fixes really, really quickly. But it's always that change mindset is so difficult, especially the bigger the change, the harder it is to get all employees on board and to make that mental model shift because odds are you're going to have one or two frustrated employees. Like it's just going to happen. So that messy middle to me is that kind of change management system. But something as simple as making credit decisions can also be there because you're changing on a dime, and so you spend 2 weeks saying, "Hey, tariffs are going to be impacted here. We need to bring it back. We need to bring down our notch. Like these 20 debtors are going to be hit by it." And then the next week it's like, well, it's on a pause. We're good. Do whatever you guys need to do. Go back to your clients who we just told no to and say yes. So like that's painful.
It's a little bit of whiplash, yeah. And you
Yeah.
hit on something, particularly interesting in your comments there, which was this idea of how do you show confidence to your team when behind the scenes you're not really sure. Like you've got to sort of put like the good front on. Hey guys, we got to keep doing our jobs. Things are going to be okay. And in the background, you're scratching your head like, I don't know which way this is going to go. I'm not sure like how to react to this. It's
Yeah. Yeah. I mean, it is tough. I mean, anytime you're messing with collections, like they are automation, right? It's tough because I want the innovation. I want the change because I can see how valuable it is, not only to us, but our client experience. Now they have a say on how we do certain wording. We can white label it so it makes it look like it's from them. These are all really positives for everybody. The back of mind is like, what if this doesn't work? What if our average days to pay goes from 35 days to 45 days? Well, look, yield is very important to factoring companies. How fast we can get the money out and then back in is really, really important. So if this starts turning up, I'm going to have to scramble to figure out, or, we're as operations going to have to scramble to figure out how to correct this, how to fix this. Express factor, where we're paying clients within minutes. Great product, fantastic product. In my mind, well, what if fraud gets in the door and we're $300,000 out the door in seconds, right? So there's always these like lingering fears in the back of my head, and I try not to let them rule on how I give my opinion or decision, but they're there and they're real, and so you have to learn to say there are risks, there are challenges. But one thing that's been tremendously great is we have two Seans. We have Sean Smith who runs our product and Sean Vo who's our CTO. And so like, the more I work with them, the more I express my concerns. They're like, oh, well, here's what we can do. Like, here's how we can put in, buffers to help you there or levers. And so that definitely helps. But yeah, that fear is always there. It's like that kind of total catastrophe. Like it all falls apart. What do we do? How do we pivot? How do we get back on course quickly? Because the longer, you can't just sit there and bleed out. You have to stop the bleeding as fast as possible.
yeah. Any daily practices, Chad, that you have found helpful, either to start your day, to keep your day on the right path, keep yourself centered?
Yeah, I mean, I think, for me, it's really important to the first 2 hours of every morning. I kind of try to dedicate not to meetings, but to myself to get aligned on what I want to accomplish that day, who I need to reach out to. Are there any employees I need to tap to make sure they're doing okay? Need help, need more training. Do I need to prep anything? I think that's really, really important is to make sure you start your day off with that kind of clarity, that kind of thought process. And I'm not saying I don't take morning meetings, but I try not to because I think that's really, really important to me to set the foundation. Some people might set it the day before in the afternoon. For me, it's that kind of early, quiet morning where I can kind of get that accomplished. And then more on not a necessarily daily cadence, but one-on-ones with your employees. I think weekly one-on-ones with your employees is extremely important. I think what that one-on-one should be is an avenue for your employee to voice concerns, problems, changes, opinions, positives, whatever it may be to you. I don't want to steer that conversation. I want to let them steer it, and kind of say, here's what's going good, here's what's going bad, and talk to them about it. And like, how can we come up with an action plan to resolve that? So that's really important. And then, I think it's important to set daily, weekly, monthly goals that are transparent for your department that you're operating. And it's like, how do we get there? Here's what we want to accomplish today. And so like, those daily goals don't have to be something new. It could just be the same thing. Like, hey, we want to provide the maximum level of service quality to every single client today. Or hey, we want to process as much invoices as possible today and say yes as much as possible today. Those are really important. But where do we want to be at the end of the quarter, right? And is our goal to reduce our client ticket count, Zendesk ticket count from 10 per client to 5 per client? Yes. Well, here's why we want to
What is
provide
that metric, if you don't mind, Jed? Can you
uh,
explain that?
the metric. Yeah. So we primarily our support calls, our support from our client comes in through emails. We use Zendesk to handle those tickets, those emails that created, and we kind of view every time that the client to tell us a problem. It's a problem with our system or a problem with our process. Can we fix it? And so we feel like if we can reduce the number that our clients have to email us a month, that means we are reducing the amount of problems they face. And don't get me wrong, you get some emails that are just basic questions or just telling us news updates, and those are great. But when we do have a problem, we want to resolve it and then like take that away. So the
That's an
best,
indicator for you.
yeah,
Hey, is there something that we need to fix in our
yeah,
internal process?
yeah. I mean, the best client the best client service call you can get is no call, right? Because that means everything's functioning right, everything's working. Maybe it's not the best, maybe it's the second best, maybe the first best is a referral from a client, but second best would be just no call at all. Is your system, is your process, or your people functioning in such a way that the clients aren't hitting a friction point? And that can be tough in factoring because there are natural friction points, but for the most part, our ticket's low because we are constantly trying to improve. And one thing we do at Denim, I'm sure other places do it, but we have a cab, right? We have a place where some of our clients can come and we do a quarterly meeting with them. Where are your pain points? How can we make it better? And so we try to take those learnings and actually apply them as quickly as possible. And so I think that's a big difference for Denim. But yeah, back to that metric. That's why we feel like the less tickets we get, it's the less friction our client has when they deal with our platform.
It's the question I should have asked at the beginning. What's behind the name, Denim? I mean, it's quite a domain name that you guys have, denim.com.
Yeah, we were Axel before that, but there was someone else in that space, not a competitor, but in that same space, and so we had to make the transition. And Denim is something that kind of really stuck with the owners. I wasn't on board when they made that decision, so I'm not 100% sure on the story why behind Denim, but it was short. We wanted something short that was catchy. The domain needed to be available. I think there's also something about Denim, kind of that all American, denim jeans that kind of breeds this idea of kind of growth and fertility that funds kind of the growth of these companies. And so that was really important. But it's catchy, it's short, and it's something we've always appreciated. I think the longer the name, the harder it is to like really kind of cement yourself in there. But that was some of the thought process. That's something that the co-owners could probably give you a better example of why they went with Denim. But I know it was a lengthy process. They had several good names and eventually settled on Denim.
Yeah, it's a solid one. I like it. It is catchy and it's a single word domain name. Those are hard to get these days.
Yeah, every once in a while we'll get emails from people saying they don't like the jeans they bought or they bought the wrong size jeans. So every once in a while we'll get those and get a kick out of them.
So I just got one more question for you, Chad. But before I ask it, I want to do two things. First of all, I'm going to invite everybody listening here to go ahead and hit the follow button on your favorite podcast app. We've had a great interview today with Chad Capooth of denim.com. And I want you to continue to get great interviews like we've had today. Chad, I also want to let people know the best way to get in touch with you. How would that be?
Yeah, with me, you can email. It's probably the best way. If you got questions, concerns, if this product interests you, if you just want to know more about it, feel free to email me. That's ccapooth@denim.com. So CCAPOOTH@denim.com. Pretty quick to get back to you. But I'm always happy to have these conversations in any regards. I think factoring, while it's a growing industry, there's still a lot of light that could be shed on it, and I think there's still a lot of positivity that can come from it. And so maybe it's a good fit for you, maybe it's not. But reach out. Happy to have a conversation. Even if you just want to know more about it. Even if you just want to have a conversation about it, happy to answer it.
That's generous of you. And we'll make sure to include a link to your email in the show notes. The last question I have for you, Chad, you and I were going to stay in touch and say a year from now, sitting down, you're celebrating one thing. What is that thing?
I'd like to think I helped Denim become the disruptor in this industry, and why I think we've made headway. I think there's a lot more to go. I think there's a lot more process change and technology we can interject in this industry and continue to take this industry from what has been archaic into this century and provide a better client experience. And, you know, one thing is I'm sure we're all heard about by now, but I think AI is going to play a big part of that. And so I really like to be one of the front runners, one of the leaders behind how do we take a process that's outdated and now leverage it with AI, and like what does that look like? And I kind of said earlier on in the show, I think a lot of companies have gone and say, well, hey, we can wipe out a whole entire department with AI. That shouldn't be the goal. The goal is to be how can we build AI or AI agents that can do what we need to do, but still need to be managed by a team, because these things aren't at a stage where they're perfect. And so how do you build these processes around them? And how do you do it effectively that's not only good for your business, but good for your client? So I want to continue to be a disruptor. I want to be able to look back in a year and say, I helped, look, I'm not going to program the code, but I helped kind of design it. I helped kind of lead the journey. And like we have now invented or created a product. We have now made a product that is so disruptive. People are knocking down at our door to get to it. And I think we're on that direction. And that's been Denim's vision from day one, is kind of these leaders in technology. But it's really important to me to like also make sure the client experience is there. And I think that can be easy to get lost. So I want to continue to be an innovator, and I want to be able to look back and say, man, we changed it, right? Like factoring is a completely different animal now because of the technology differences, we made at Denim.
Well, and I like what you're hitting upon there, Chad, sort of this balance of, how do we use the tools, and AI is a big one lately, to make us better at what we do, make the customer experience better, but not replace the human element wholesale. I'm a subscriber to several software services, and I've seen a trend recently where not only are more of the chatbot responses coming from AI, and I'm fine with that, but when the AI can't get the answer right, I need to be connected with a human being. And increasingly, it's becoming harder and harder to get to a person, to the point where, one of the softwares that I rely on a daily basis, very integral to my business, it takes at least 1 week to get a human reply now. And so that's not what you guys are talking about. You're like, the human element's still very important. How can we, bring AI and bring the software in to help us be better at our jobs and free those people up to do more of those parts of the interaction that require the human experience?
Yeah, I mean, first of all, the AI chats, I understand it, but like you, they can drive me up the wall, and I agree with that. I was flying on a major airline the other day, and my flight got canceled, and so like I'm trying to go on the website and change it, but it won't let me. So I reach out on the chat, I get the AI chatbot. It takes me an hour to get to a human, and it's just it was not a great experience, right? And look, I'm sure they saved a ton of money with it, but for me, not a great experience. And so like to answer your question, like I think the role of AI, where it needs to be implemented today, is it needs to empower your employees, right? And it doesn't mean you need to replace a whole department. It needs to say, okay, we have 5 people in collections a day. How do we take AI and empower them to continue doing their job, but take on 5x the book, where previously it was a flat 1-to-1 ratio, per dollar per collector ratio? How do we now 5x them? So how do you take your employees that are there, that have built the foundation where you've got to? Because it takes employees to build a foundation. It just does. And so if your goal is to replace them, then I think you've missed the point. Your goal should be to empower employees with AI and let them continue doing their job more efficiently. And then they win and you win, right? And so now you're 5 times, 10 times, 50 times your size, but your OpEx spend, your spend on your operations employees, or your spend on your employees overall. So your revenue per employee has skyrocketed, but your spend has gone down because you've empowered them, right? And so, how do we take what used to be one client service rep could handle about $7 million, $10 million of AR before you had to hire another one. Now, how do you empower them? And now they can take on 50 million, 75 million, because AI is there prompting them, helping them, providing them feedback, points of interest, ways to phrase things. Like it's remarkable. So it's got to empower. It's not to replace. It's got to be to empower. And I think that's the way you get ahead. And I think we've probably seen companies that have tried to go the replace route, and now they're starting to backtrack it, right? And they're starting to hurt. And I think that's AI is it's not perfect, and it's going to take humans to kind of guide it. But more importantly, you need to build it so it empowers your employees. Otherwise,
empower, not replace.
Empower, not replace. Yeah.
Chad Capooth, VP of Ops at Denim. I want to be the first to thank you for sharing both your time and your story with us today. I really appreciate it.
I really appreciate having me on, Anthony. This was a blast. Happy to talk about it anytime. So if you ever want to have me back, let me know. But anyone's interested about factoring, reach out or search the web. There's a ton of information out there. But Anthony, I had a blast. I really appreciate you having me on.
Folks, that's a wrap on another episode of the Inspired Stories podcast. Thanks for learning with us today.